While the world was celebrating the historic breakout of silver on Monday, a different kind of activity was taking place in the shadows of the financial system. It wasn't trading, it was sabotage. Late last night, under the cover of darkness, the exchange officials and the heads of the major bullion banks held an emergency session. They realized that the free market was about to bankrupt them. The price of silver had broken the $75 barrier, and the mathematical models showed a straight line to $100. They had two choices: accept their losses and go bankrupt, or change the rules of the game to steal your wealth. They chose the latter. At 3 a.m., a notice was quietly posted to the exchange website. It wasn't announced on the news, it wasn't tweeted, but its effects were instantaneous. They declared a margin requirement hike of unprecedented scale. This is not just a regulatory adjustment. It is a weaponized attempt to force retail investors to sell their winning positions. They couldn't beat you on the field, so they bribed the referee to change the score. To understand the depth of this betrayal, you must understand the mechanics of margin. When you trade futures contracts on the Comex, you are using leverage. You put down a deposit, let's say $10,000, to control a much larger amount of silver. This system works fine until the banks start losing. The rule change enacted last night effectively doubled the amount of cash required to hold a position. Imagine buying a house, signing the contract, and then the next day, the bank calls you and says, "We changed our minds. You need to pay us another $50,000 in cash by noon today, or we will take your house and sell it." That is exactly what is happening to thousands of traders right now. They are being hit with margin calls, not because the price dropped, but because the rules changed. The exchange is forcing a liquidation event to create artificial selling pressure to save JP Morgan from insolvency. But raising the margin wasn't enough to stop the buying frenzy. We are receiving reports from multiple brokerage platforms that buy buttons are being disabled or restricted. This is the GameStop playbook all over again. Traders attempting to buy new silver contracts are seeing error messages. Risk management limit reached, or trading restricted to liquidation only. This means you are allowed to sell your silver to the banks, but you're not allowed to buy more from them. When you remove the ability to buy, but keep the ability to sell, the price can only go in one direction, down. This is not a free market. This is a controlled demolition of the price. They are artificially restricting demand to cover their naked short positions at a discount. It is market manipulation in its purest, most illegal form. While they restrict your ability to buy, they are unleashing their own algorithms to paint a false picture of the market. This morning, we witnessed massive sell walls appearing on the order book. Blocks of 5 million ounces appeared for sale at $76, terrifying the market. But here's the catch. These orders were fake. This is called spoofing. The banks place a massive sell order to scare the price down, and milliseconds before the order is executed, they cancel it. They never intended to sell. They just wanted to create the illusion of massive supply. They are gaslighting the chart. They are trying to convince you that everyone is selling, when in reality, everyone wants to buy. It is a psychological operation designed to shake the weak hands out of the market. We must address the role of the Comex, the exchange itself. The exchange is supposed to be a neutral referee. It is supposed to ensure a fair game. But the Comex is owned by the very banks it regulates. The board members are former executives of JP Morgan and Goldman Sachs. When they declare a rule change, they are not protecting the market. They are protecting their friends. By raising margins and restricting positions, the exchange has violated its fiduciary duty to the public. They have proven that the paper market is not a place for price discovery. It is a casino where the house kicks you out if you start winning too much. The legitimacy of the Comex died this morning. They have sacrificed their reputation to save the solvency of the cartel. History does not repeat, but it rhymes. In 1980, the Hunt brothers cornered the silver market, driving the price to $50. The banks were facing total collapse. So the exchange changed the rules. They declared Silver Rule 7, which stated that traders could only sell, not buy. The price crashed from $50 to $10 in a matter of weeks. The banks are using the exact same playbook today. They think it will work again. But there is a critical difference. In 1980, the demand was purely speculative. Today, the demand is industrial. You cannot tell Apple or Tesla liquidation only. They need physical metal to build products. The rule changes might scare speculators, but they cannot stop industrial consumption. The banks are fighting a war against physics, and physics always wins. The most damning evidence of their cheating is the spread between the paper price and the physical price. While the banks manipulate the digital number on your screen, the real world is telling a different story. If you try to buy a physical 100-ounce bar today, dealers are charging premiums of 40% or 50% over the spot price. Why? Because the spot price is fake. The paper price is a lie agreed upon by thieves. The real price is what you have to pay to get metal in your hand. This disconnect proves that the Comex has become irrelevant. The banks can smash the paper price to zero if they want, but they cannot make silver appear in your vault. The market has bifurcated. There is the banker's price and the people's price. Traders need to be aware of the next step in this escalation. Buried deep in the user agreement of the exchange is a clause called force majeure. This allows the exchange to void contracts in the event of an emergency. If the price of silver continues to rise despite their cheating, they will likely declare force majeure. They will say, "We cannot deliver the silver because there is none left." Here is a cash settlement based on yesterday's rigged price. This is legal theft. It turns your property right into a paper claim. They are preparing the legal framework to default on their obligations. They know the vaults are empty, and they are writing the rules to absolve themselves of liability when the run on the bank begins. Where's the outrage? Where are the investigations? Turn on the financial news, and you will hear silence. CNBC, Bloomberg, and the Wall Street Journal are ignoring the biggest story in finance. They are not reporting on the margin hikes. They are not reporting on the shortage. Instead, they are publishing hit pieces calling silver a meme stock and a dangerous bubble. This coordinated media silence is paid for by advertising dollars. The banks are the biggest advertisers on these networks. They are controlling the narrative to keep the public in the dark. They want you to think the price drop is natural, not engineered. They are trying to suppress the truth as hard as they are suppressing the price. Why are they going to such extreme lengths? Why risk prison and revolution? Because JP Morgan is trapped. They hold the largest short position in the history of the commodities market. If silver hits $100, the losses on their books will exceed their Tier 1 capital requirements. In simple terms, they go bust. The entire bank could fail. This is why the regulators are allowing them to cheat. The Federal Reserve knows that if JP Morgan falls, the entire U.S. banking system collapses. They are deeming JP Morgan too big to fail and giving them a license to rig the market to survive. We are not fighting a bank. We are fighting the combined power of the state and the financial elite. However, there is one player who does not follow American rules: China. The Shanghai Gold Exchange, SGE, operates outside the jurisdiction of the Comex. China sees this cheating and they view it as weakness. When the West suppresses the price, China accelerates its buying. They are using the artificially low price to drain the West of its remaining strategic reserves. The Chinese government is encouraging its citizens to buy gold and silver. They are hoarding the metal while the West plays with paper. By cheating, the American banks are inadvertently handing over the keys to the future global economy to the East. They are selling their birthright for a quick profit. The rule changes are also infuriating the industrial giants. Companies like Samsung, Tesla, and Sony rely on the futures market to hedge their costs. When the exchange rigs the market, it destroys the ability of these companies to plan for the future. We are hearing rumors that major industrial buyers are leaving the Comex and setting up direct supply lines with miners. This is the death knell for the exchange. If the industrial users leave, the Comex becomes nothing more than a gambling parlor for paper speculators. The physical market is moving away from New York, leaving the bankers trading phantom contracts amongst themselves. The banks made a critical miscalculation. They thought that by crashing the price and changing the rules, they would scare retail investors away. They thought you would panic and sell. Instead, they have made you angry. The forums and social media channels are exploding with rage. Investors are not selling. They are doubling down. They are pulling money out of the system and buying physical metal to punish the banks. This is no longer just a trade. It is a movement. It is a financial revolution. Every time they cheat, they prove our thesis correct. They are radicalizing a generation of investors who will never trust a fiat currency again. The banks want you to believe they are all-powerful. They want you to believe they control the price. But their actions today, the frantic rule changes, the margin hikes, the spoofing, these are not the actions of a powerful entity. These are the actions of a desperate, cornered animal. A strong man does not need to cheat to win. The fact that they are cheating so openly is the ultimate sign of weakness. It means they have lost control of the market fundamentals. They are trying to hold back the tide with a broom. They can delay the inevitable, but they cannot stop it. The dam is cracking, and they are running out of fingers to plug the holes. What we are witnessing is the destruction of the concept of a free market. If the rules can be changed whenever the billionaires lose money, then there is no market. There is only a rigged game. This creates moral hazard. It tells the banks that they can take massive, reckless risks, and if they lose, the rules will be changed to save them. But this destroys faith in the system, and faith is the only thing backing the US dollar. By rigging the silver market, they are undermining the credibility of the entire American economy. They are burning down the village to save the castle. Despite the paper games, the supply crunch is getting worse by the hour. The mines are depleting. The grades are falling. No new major mines have been discovered in a decade. We are consuming silver faster than we can produce it. The above-ground stockpiles are gone. We are now eating into strategic reserves. The banks can print paper contracts until they run out of ink, but they cannot print geology. The fundamental deficit is real. Eventually, the manufacturing demand will overwhelm the paper manipulation. When a factory has to shut down because it lacks silver, the price will go vertical, regardless of what the Comex rules say. Much of the short selling is happening in the shadow banking system, the over-the-counter OTC market. These trades are not reported to the public. This is where the real leverage is hidden. We believe the true short position is 5 to 10 times larger than the official numbers. This hidden debt is a ticking time bomb. As interest rates rise and the silver price climbs, the cost of carrying these dark positions is becoming unbearable. We are approaching a Minsky moment for the bullion banks, a sudden, violent collapse of asset values caused by excessive hidden leverage. Despite their cheating, the transfer of wealth is still happening. Every ounce of physical silver you buy today is an ounce that the banks cannot use to cover their shorts. You are removing the collateral from the system. They are trying to shake you out because they need your silver. Do not give it to them. The volatility is the price of admission. The cheating is the sign of victory. We are in the final rounds of a heavyweight fight. The opponent is dirty, he is hitting below the belt, but he is exhausted. He is wobbling. One more push, one more surge of buying, and he goes down. So how does this end? It ends with the failure of the exchange. It ends with the price of physical silver decoupling completely from the paper price. We will see a black market price for silver that is double or triple the official price. Eventually, the official price will have to chase the real price. The gap will close violently. The banks will be bailed out by the Fed, the currency will be debased to pay for it, and the holders of physical metal will be the only ones left standing with purchasing power. The cheating is not a sign that the squeeze is over. It is a sign that the squeeze is entering its terminal phase. They changed the rules because they are losing. They halted trading because they are terrified. They want you to sell. They want you to give up. But you know the truth. You have seen the empty vaults. You have seen the math. The system is broken and silver is the truth. Do not let them steal your future with a rule change. Hold the line. Demand delivery. Empty the vaults. The era of market manipulation is ending and the era of the people is beginning. They can rig the game, but they cannot stop the revolution.